Hi everyone, you will be hearing this on September 28th across the pond. This is Mish Schneider, Chief Strategist of MarketGauge.com. What you're seeing before you here is the chart of the dollar versus the yen. And I'd like to begin with that for a couple of reasons. I think number one, you can see the rally is very close to where it was just about a year ago in October before the massive sell-off. And number two is, what I really want you to see is the chart beneath that, which is the momentum chart, because we can see that the momentum back here was much higher than where it is here, even though the price really wasn't that much higher. So while we had this massive run up in anticipation of the Federal Reserve doing everything that it did to raise the rates, there was a definite relief rally in the yen versus the dollar as we ended the year, and really basically stayed that way until more recently when the Fed got active again with their hawkish talk. But the reason why this is interesting to me is not only is it very much into resistance and the momentum is still strong, but like I said, not as strong, it does imply with this momentum not being as strong that perhaps there is an intervention coming in the Japanese yen. There's been a lot of buzz about that. So we're going to take this a little short term to give you some actionable information. We'll take a look at the NASDAQ as probably the one index that would recover before anything else when the market eventually bottoms. If it hasn't already bottomed, we don't know. And of course, we'll take a look at the damage this dollar has done to the gold market. And we'll take a look at the oil, which has seen no damage because of the dollar, and a fresh look at the natural gas. And that should give you some good idea of how to be looking at things as we have some new economic data in the US coming out. Jobless claims will be one in particular. GDP will be another. So let's get going. So I really love this opportunity that we get when we're looking at these charts to look at the bodies of the candles along with the wicks and see what lines up well. And if we're going back to that point in time right here, we can see that 149.04, I think I can even make it a little bit tighter here, 149.11 is pivotal as we're heading into Thursday. So if we're above 149.11, I would say that we could still see more upside. Below, I would think that we might see a little bit of a dip here, and that the yen could actually get some follow through to the upside versus the dollar. So looking at that 149.11, a couple of things to watch. In terms of the next level of resistance, we're really looking at, if you get rid of that big wick on this day, we're looking at a move up to about 150 point, let's call it 10. And then we can reevaluate what happens there. Obviously, if it keeps going, that's a whole other thing, but that would also be actually at a record high. On the flip side, of course, if we break down under that 149.11 that I was telling you about, here it is, then I think we can say that if we look at the congestion here, along with recent support levels here before we had this big move, is we're really looking at something at around 147.50. That would be quite a dramatic drop for the dollar and rise against the yen. So that would be the ultimate goal, at least for the first stop. But we can also say more closely under that 149.11 is that we can really be looking at here probably around 148.46, 148.50 before we start really thinking much lower than that. And of course, it would also mean that a possible reversal could happen because we're at a 60-day plus high, which means the low of today, which is at 149.70. If we close below that tomorrow, besides what I just mentioned about the 149.11, that would also be another indication that a correction is coming in this. So to review, 149.11 is pivotal, above more positive, below more negative. 149.70 is today's low. Obviously, if we get to 149.11, that means we've kind of broke today's low and we'd be looking more for a reversal. 148.50 would probably be our first real area of support, and then we can start looking more around the moving averages. So looking at the NASDAQ, obviously I'm pointing this one out because there's a few things. Even though it's broke down under some key ranges, people are talking about a head and shoulders top. It's still, if you look at it a monthly basis, and of course I encourage you to read my dailies because I talk about the monthly charts, particularly in this latest issue, it's still outperforming everything else. So that's why I want to start there. Now, the August low was key. I thought perhaps it could hold 14,792, so keep that number in your mind, as right now it's trading, as I'm talking to you, 14,735. So we're not quite there. However, the high today was 14,806. So as we're going into the next day, and I'll put my cursor here, it's pretty close, not exactly on, here we go. If we can get over that 14,790 level from that August low, then I would think that we will see some kind of a pop. We are indeed oversold when it comes to these indices. And even though the latest reaction is not just on the heels of the Fed last week, which spooked everybody, but also the strong dollar, and also the fact that we have a potential government shutdown, which, by the way, 90% of analysts believe will actually happen, that could in turn lead to, and this is how the market thinks, lead to the Fed doing something a little less restrictive if the government shuts down, even though we all know it most likely would be temporary. So at 14,790 and above, I would say that we could certainly see our way back up to 15,000, maybe even a little higher, 15,015, before we reassess. Do I think that this market is completely broken and will go down from here? Well, again, it depends on where you look. Clearly, if you look at the small caps, they look pretty broken, but the small caps are also holding a very key long-term monthly moving average, which means that if they can subside in the downfall along with some of the weaker U.S. sectors, NASDAQ for sure, as where it attracts the most money, will benefit from that, and that's when you want to look at stocks like an Nvidia at around $400. Now, of course, on the flip side, 14,790-ish being the area or the pivotal point that we're going to be looking at here. Below, then I would say that we have not necessarily seen the end of the pain, and in which case the next level would be really basically, I mean, there's a little bit of support here right at today's low. So if we broke that 4,790 and then again broke down under today's low, which is 14,586, then I think we can see our way back down to these levels right here, where we have 1, 2, 3 tops, a close the next day, very close to the bottom of this day. So 14,272 area would be my next target. By the way, if you were wondering to yourself, my goodness, is she doing this video standing in the middle of a highway? I apologize for that. I actually had our door open because it's so beautiful, but unfortunately that brought all the traffic noise. I have now closed the door. So now let's take a look, speaking of closing the door, at the gold market. Certainly it looks like the bulls have had the door closed on them with this dramatic move that we've seen in reaction to a few things, obviously the strong dollar and the higher yields, but also gold. If you can collect a dividend and collect a yield, why would you go to gold? Right now, the only areas that people are really thinking inflationary is oil, and of course I'm very, very, very seriously watching wage inflation as really, I think, the next big catalyst. But gold hasn't really felt that kind of pressure yet. That would have to be major social unrest with things breaking down and stopping, oh gee, like a government shutdown. So the fact is gold has just been asleep at the wheel. But will it stay that way? So let's go back to this little history here, which is in March, and we're approaching that low. The low in March that day was at 1883.80. And the low, as we're talking today, was 1894.90. Pretty darn close. A little bit higher, about $11 higher, not very much. So as we're looking at tomorrow, we have to wonder, is gold overdone? One thing we have seen over and over and over again in the metals markets in general is that when gold looks unbelievable, like we saw here, it's probably time to sell. And when it looks really, really bad, then it's probably time to buy. If we go with that sort of equation, then we have to say, looking at today's closing price, 1894.70. Clearly that doesn't necessarily mean much because it's sort of smack dab, just slightly above the low that we saw in March, but not at any great critical juncture. So I would stretch that a little bit and say a move over 1900, now maybe we're cooking with salt, right? So if we see that level over 1900 tomorrow as you're coming into the market, then I would say probably we're going to see a move immediately back up to 1912, 1915, with the possibility of where we began this day today at 1921, and then we can take another look. Clearly we get through there, we've got hurdles all the way up, 1940, 1956, remember that 1965, we never really got past that, and then of course we're not talking about 1980, 85 at this point, but you know, keep it in your mind. On the reverse side, we can't get through 1900 and we come in lower. We're going to be looking at that low carefully at around 1883, but we also have to move the chart back because what happens underneath that would probably be going back to looking at the levels we haven't seen since November, December. Now, of course, this is the December contract, but roughly, I would say roughly looking at levels at around 1870, that would be next, maybe even closer down to about 1850, 1860. I think that would be an unbelievable buy opportunity if it gets down there, which is why I'm sort of thinking it won't get down there. So that's why I want you to keep your eye on that 1900 level. So all the analysts are really, really focused on this $90 a barrel level. And you know, since you've been listening to me, we really felt that 80 was the major breakout once we got some momentum above that. And clearly what we can see is that if we measure the move from the low here, which is at 60, let's round it up to 64, up to about 80, so that would be a $16 move. From 80 would give us a measured move of around 96, of course looking at the December contract. And 96, really, that kind of comes in line. Well, first of all, we had two areas right here, right based on our closing level, so we can talk about the closing level momentarily as pivotal. But we can also, if we go back just a little bit, 96, really you could say more like 96, 97, it could overshoot that and then stop. We don't know, but let's move a little bit here into looking at what's going on right now. So let's go back to that closing level. That closing level at 93, let's call it 93.75, is extremely important. Obviously, we're going to call that our most intermediate term pivotal point. And again, just follow my cursor back to the left, and you can see those highs in September and October are right where we are today. So, very easy. Above that, yeah, we'll go higher. Do we go up to 96, 97? Possibly. Do we even go to 100? That's what a lot of people think. However, if we can't get through that 93, let's say 75, just to be round numbers, then I would not be surprised at all to start to see this coming back down, probably closer move now up to around 91, down to around 91.30 level would be our first area to look at. And then of course if that breaks, then we're looking also under today's low, which is at 90.40. We break down under today's low at 90.40, that's quite the reversal with a new 60 plus day high. So keep your eye on that 93.79, 75 to 80 level as pivotal. Up, I see a couple of dollars, maybe more to the upside. But if we break down under that and we break down again under this 91.35 level here, where there's some intermittent support, and then again under today's low at 90.40, then a much bigger correction is coming, and that also might indeed help gold possibly, because it would also help clearly the NASDAQ and some of the other instruments as well. Okay, let's have a final look here at natural gas. And I'm not going to go through the fundamental reasons why, but again, we've been looking at the spot contract. This is the December contract. Looking at the December contract, what strikes you is that we're above the 50 and above the 200-day moving average, so we've moved into an accumulation phase in terms of moving averages. But that doesn't mean I'm getting really excited, because we still have tremendous price resistance here up at around 303, with today's high, by the way, being 295. So we've got a ways to go, but this was a good start. So for, again, tomorrow, I'd be watching December contract right at that 50-day moving average. Let's call it 280. And we know in spot 280 was an area that I wanted to clear. So if it holds 280, more to the buy side, breaks down to 280. Over 280, our next level we really need to watch now for is over this 302, 303. We get a close above that, then I do believe, again, if we go back and look at all this consolidation and we can say, rounding off from 2 to 3, $1, that would measure up to about $4 here in natural gas before we took a fresh look. So that's it for today. I hope you all have a great trading day. Thanks so much for watching, and bye for now.